Hey traders, this is Christian from Tribeca Trade Group with your weekend recap video and things to watch for next week, events to watch for next week. So, just a quick recap of last week, looking at the best performing sectors. You had biotech, which was up 3.5%, and finished the week very nicely. It was actually the best performing sector on Friday. And then you also had financials, which in very much in the beginning of the week outperformed. You could see XLF, KRE, and KBE. So basically, all banks doing very well last week. Doesn't really matter which ETF you look at. There was really nice outperformance there. Healthcare was in there. Also, steel and semis also strong, with industrials also outperforming for the week. In terms of areas of the market that underperformed, it looks like gold miners gave back some of the gains that they've seen in the last 2 weeks, and as well as energy continues to be on the bottom of the list in terms of underperformers. Even though crude has been going sideways, and we'll look at a chart of crude in a minute, it seems like we're getting a little bit of a hint from the energy names that are starting to, I wouldn't say break down, but it's definitely not as strong as they've been. It's a quick chart of XLE, and you can kind of see what I'm saying from here. First stop was the 50-day moving average, and we weren't able to hold that. Next thing was the 100-day moving average, and we're hanging around that for a couple of weeks, and we're now below that. So next stop, if we can't get back above the 100, is the 200-day moving average. So what I'm wondering with energy is, are the companies starting to show or provide a little bit of a hint of what crude might be doing? And since I'm mentioning crude, we will look at that chart now. And it's basically been just a big sideways action for the last 2 months. Anytime we get to be above 54, the market rejects it, and anytime that we start to get below 52, the market rejects it, and we get right back into this middle range. So we really can't make a conclusion yet on which way crude is going to go until it really breaks up higher than 54 or below 52. But however, the energy names could be providing a little bit of a warning signal, as they have been weak. So I'm going to go over various excerpts of our weekend newsletter, which you can subscribe to at tribecatrading.com, tribecatradegroup.com. So last week's performance, pretty strong, especially in the beginning of the week. Nasdaq continues to outperform, up 1.9%, and SPY finished up 1.5%. Most of the gains that we saw last week were Monday through Wednesday, and then we started to trail off a little bit on Thursday. So we saw a big spike in the VIX on Wednesday, up 11.5%, and traders were starting to think, hey, this is the pullback that we've been expecting or waiting for the indices to come down a little bit. That really never materialized. We were down about 20, 30 basis points, and then we came back right at the end of the day. So, I'm a bit surprised. I think that we are at this point due for a pullback. All of the major indices are in overbought territory, except for small caps. But we continue to see buyers in this market, and any small dip seems to get bought. The other thing that I've been noticing and have been talking about for the last few months has been the correlations within the S&P, and those correlations continue to drop. And why I bring this up, it just is harder for the S&P to sell off when some names continue, or some areas of the market continue to outperform. And when correlations are this low, it generally means it's a stock picker's market. You have various opportunities in different sectors, because the S&P, the components of the names, the 500 names, are not moving in unison. They're not moving together. So it remains a stock picker's market. Volatility, if we do get a spike in volatility, that will bring correlations up a bit, but that hasn't been seen yet. So I don't want to jump to conclusions from when there's something that's not there, but it's just not there yet. So I wanted to go over the technicals, and the other point to make from last week is we had really positive economics that came out last week, and Janet Yellen had two speeches last week. So going into those speeches, the probability of a March rate hike was right around 30%. So it's really low. The the financial media keeps talking about, as well as the Fed, whether or not there's going to be 2 or 3 rate hikes in 2017. And the question is, if it's going to be three, where are they going to fit these rate hikes in? Because in March, we're not implying, where it's only right now a 34% chance of a rate hike. So really, it looks like the market is pricing in two. So, you know, before the meeting, before Janet Yellen started to speak, it was about 30%. It did jump up to about 42% in the middle of the week, and then it jumped back down to 34%. So the takeaway again is that the market is just not expecting any interest rate to, or a 34% chance, which is a small chance of a rate hike occurring in March. So I do believe that is a risk that is present in the market, is that the market is not coming to terms with what the Fed is saying in terms of rate hikes happening. And also if you look at the economics last week, it did show a jump up in inflation expectations. You look at the PPI that came in zero point 0.6. This is the highest reading that we've seen in 2 years. Same thing with CPI, which is another gauge of inflation and a bigger gauge of inflation, came in zero point 0.6 versus zero point 0.3. Retail sales came in stronger than expected. Empire manufacturing came in stronger than expectations. So this is giving the Fed more ammo for a rate increase. So that's the bad news, is that the market is not pricing in the fact that we may get a hike in March. The good news is we have till March 15th, so we've got virtually a month until the market can kind of continue to do what it's doing without a potential rate hike coming for a month. So I think that was very important, a very important takeaway from last week. Looking at the technicals from last week, we'll just kind of just jump in here to SPY. And the major thing that I see on this is, number one, nice breakout for the last couple weeks, breakout above the value area. That was caught. We caught that right when it happened in the Tribeca Trade Group room. But the two things that I notice here are, number one, we're really overbought. The relative strength index, the RSI, anything above 70 is when you're in overbought territory. Normally the indices don't stay in overbought territory for very long. You could see SPY when towards the end of November and the beginning of December, we did get above 75. Take a look at what the price did afterwards. We didn't go up much further from there, and we digested the price action for basically about a month and a half, 2 months. And so we're right where we were back towards the end of November. So that to me is kind of giving a sign that the markets are really overbought here. The other thing that I have drawn here is the yellow line on my chart is the 5-period exponential moving average. It's a short-term moving average, and the blue line is also short-term. It's 20. This really gives me a sense of how the market ebbs and flows, and once the yellow line gets way above the blue, usually it's inevitable that it usually comes back in and kind of touches, or at least comes back in and almost meets, like we saw here. But we saw this separation that we're currently seeing now, and again, you can kind of see what we did for December and half of January, where we moved sideways. So that's, I think, could very well happen in the next couple weeks, that we digest some of those gains. Nasdaq is a little bit different of a picture. This just has been up and away and continues to underperform, and really overbought here for a major index to be an 84. This is really an overbought territory. So really nice uptrend. And I try to when I'm shooting these videos, I kind of put this into the frame this in terms of if you're a long-term investor or if you're a short-term investor. I'm both. I have stock positions in IRAs, 401ks. I'm really not touching those positions. We're in an uptrend. It's great. Those are my long-term positions. If you're an option trader, and trading more in the short term, where you've got contracts that may expire a month or a couple months out, this is, for me, this is an area where I want to take profits, especially in the major indices, and then kind of regroup and be patient and sit on your hands and wait for the market to come in a little bit, which I think, using the relative strength index and showing that we're way overbought is a great indication for me to do just that. Small caps a little bit different of a picture here. They were strong in the beginning of the week and then a little bit weak towards the end of the week. This is not overbought right now. So if we do get a little bit of a pullback, one area where I think I would be looking to add longs in the space is that 136.60 support. That's about $3 higher than we are, and I don't think we have to get right down to there. But if we do get a little volatility in the market, that would be an area. If it holds, I would look to add longs in the small cap space. And then the other thing that I want to mention is, you know, what we do on a daily basis is watch the tape and watch the level of buying that we're seeing in options. So, what was a little bit surprising to me in front of a 3-day weekend, normally we see traders kind of reduce positions and kind of take off a little bit of risk. That wasn't the case on Friday, and that could have been because of the Unilever deal provided some positive sentiment into the market, but it was really heavy and strong call buying on Friday. So, this is my sheet for Friday, which I can bring up here. And you could see as many that we did see a lot of aggressive activity in terms. I mean, the list is huge for the call activity that we saw, and it was multiple sectors. It was a lot of consumer staples, a couple of consumer discretionary names. Nike and Starbucks are in there as well, and Marriott. But we also saw some nice tech buying as well. Names like Skyworks, the Apple call buying has continued. And then there was a couple other signals that we saw in names like Finisar, and then of course T-Mobile and Sprint, which that rumor materialized late in the afternoon on Friday. But call buyers were right there, right before that news hit the tape. So, that's one of the things that I look at too. While we are overbought territory, the buyers are continuing to go after positions. Just a quick sector review. We've got 1, 2, 3, 4, 5, 6, 7, 8 sectors that are above the 50-day moving average. This is strong. Was there a big noticeable change from last week? No, not really. There was some nice rising momentum that we saw the previous week. That kind of faded. You could see, for example, on this momentum indicator, normally when the market when there's real strong momentum behind it, our indicator will say just that there's rising momentum. So notice that we're not seeing that except for consumer staples, which again, with the possible deal with Unilever, is really giving them some momentum behind it. So that one has rising momentum. The other ones do not. And then, so no major change there. We already talked about energy. REITs are just underneath the 200-day moving average. That could be a sector to watch to see if that gets back above the 200-day, and it will join some of these sectors up here. We talked about performance fund flow data last week. I don't track mutual fund data, but I did see somebody put out just continuous outflows and not really much going on in terms of mutual fund data. But ETFs continues to be where the action is at and where investors are pouring money into. So last week, $10.7 billion going into equity ETFs, strong almost every day of the week, because I do track this data on a day-to-day basis. Just to give you an idea, the previous week, so the last 2 weeks, really strong inflows. The previous week had $9 billion of inflows. And where that was mainly composed of in terms of sectors, financials, twice as many inflows as any other sector last week, $1.8 billion. 50% of it was XLF, but the other 50% was in several different financial ETFs. So it's not just XLF that's or providing the inflows. It's also the regional bank ETFs, KBE, the banking ETF, KBWB also saw nice inflows. That tracks the money center banks. And then VFH, which is the Vanguard Financials, and IYF, which is the iShares Financials ETF, also saw inflows. So really, really strong there, $1.8 billion. The next sector that saw strong inflows, which $882 million went into materials, which is also a very strong number. If you take a look at what ETFs composed that category, it was mainly the gold miners, GDXJ, GDX, and actually the 3 times levered gold miners ETF Nugget as well, and UGT. So that is interesting to me. Gold, if you saw this video or saw my commentary last week, GLD saw the biggest inflow of any ETF last week. This week it slowed, but the money is still going into the miners, and they look pretty strong. If you look at GDXJ, It is remains above the 200-day moving average. It's broken out there. It's broken above the 200-day moving average and been doing a little bit of digestion above here. But I think this is a really interesting group to follow and to possibly be long as it's above the 200-day moving average. Also, ABX, a gold miner, had earnings last week, which has been on a nice run above the 200-day moving average and just powered through. This was a name that I was long and just trimmed going into earnings, and unfortunately, the move was really, really strong after earnings, which I hate to see that happen when I just get out of a position. I just did not want that earnings risk, but I can obviously get back into that name because we did get an inside day on Friday in ABX. So further to that, other flows. There was several other sectors that had strong flows for the week. Industrials, tech, energy, and consumer staples also inflows. On the outflow side, it was only utilities and healthcare. Healthcare lost $370 million of assets, but if you remember the last 2 weeks, it's had really, really strong. Really, really strong inflows. So I would say that's kind of an inside week for healthcare if you wanted to graphically look at it. In terms of international ETFs, I don't have a lot of things, areas of the market listed below here, but there were some really strong inflows into emerging markets, and that is, I believe, the third consecutive week of strong inflows in emerging market ETFs. It was $1.5 billion being added to that group last week. The previous week was $1.4 billion. So this has continued to recover after the election, had the election dip, but money has been really being added back to emerging markets and quickly. The breakdown of the ETFs that actually saw the inflows, IEMG, which is very similar to EEM, it's core emerging markets, very similar to EEM and VWO. VWO also had inflows, as well as EMB, which is emerging market bonds. Also on a country level, Brazil continues to see inflows. That's a second straight week of inflows into the EWZ ETF, and this is a pretty strong looking chart. So again, why I detail this flow is this is the evidence of where the buyers and where the buyers are going into this market. So EM, you could see it's just recently broken out of this range. I'm also going to talk about the biotech chart as well here. But you have to zoom out a little bit to see. If we go to a weekly chart, you can see in EWZ, we're right above the yearly value area. So you've got some nice support here, and we're still, much lower than where we were a couple of years back in the Brazil ETF. So I would say for the Brazil ETF, you've got your defined support at 38.29 on the weekly chart, and a good area to use as support for any longs in the space. We can look at EEM as well. EM as well, also above the yearly value area, and I would watch 37.65 for the emerging markets ETF. Other than that, in international flows, it was pretty quiet. Developed international markets were light. They did see inflows, but it was only $177 million. And that's it. There was no major flows in any country-specific ETFs. So I'm just going to go ahead and look at a couple of charts before we end today's video. IBB or XBI, I think, is at a really crucial technical point. We could see if I bring up the daily chart. So we broke above this downward trend line for the last couple months, but we're running right into where the last time that biotech got to and then failed. So if you kind of look back, I don't draw these purple lines. These are automatically drawn. This is a virgin point of control, a VPOC, and this is exactly the last time. These end up being very important technical levels because this is the level right around this 69.5 where we stalled out last time once we hit this level. So we're right at it again. If we can get above this, we've got some nice. I think we've got more upside to go, but we need to get above. Let's call it $70, and that would be confirmation that the uptrend is continuing from what we've seen here in the last couple of weeks in biotech. Couple of other areas to look at that I profiled in the newsletter: consumer staples. With that deal last, or not the deal, but the possibility of that deal between Kraft and Unilever. We've also been seeing a lot of call activity in names like Colgate, Kellogg, General Mills, and you can see that the consumer staples ETF is now firmly above the 200-day moving average, which is the white line on my chart. And you've got one of those purple lines, right around 55 and a half, maybe a little bit shy of that, 55.40 could be where we're headed to in the consumer staples group right now. So that's about $1 above. Some other charts that I profiled, we already talked about the gold miners ETF, and then semis. No major inflows to this group last week, which is what I usually profile in the newsletter. But just really strong earnings from a couple of individual names: Analog Devices, Applied Materials, ON Semiconductor. So, while these individual names, semi names, have been strong over the last couple of years, the earnings is not giving us a sign that there's any weakness to come. All three of those names nicely beat expectations for earnings, both on the top line and on the bottom line. So, this is an area that if we do end up getting, or if we do end up seeing a little bit of volatility and we get a little bit of a dip, I think this is an area that you want to be in. Two areas that I'm really looking at, and one trade, actually trades that I put on last week, is AMD and cash. AMD had that nice breakout after earnings, or continuous breakout here. And after earnings, nice move up, but it has come in here. It's resting on the 20 period exponential moving average. So I started along here. If we get a little bit further, I was really looking to take a bigger position right around 1232. We never got down there, so I started the position right in here. And then NVDA. NVIDIA, so an area to watch, and I think I talked about this in last week's newsletter. It has been digesting the earnings move, and we're right at the top of value. So what I did is last week, and this is a Tribeca Trade Group trade, is I sold put spreads, which are bull put spreads in this name going out to April. My thought is that this name may continue to move sideways a little bit, continue to kind of digest this big run up that it's had, and then we'll eventually continue higher. So I have that trade in place. You have to be a member of Tribeca Trade Group to get that real-time alert and the details of that trade, but that is what I'm thinking for this name. So then the last part of the video that I like to go over is either the 10 or the 12 best option trades from last week. These are all trades where these are aggressive trades, and they're going out at least a month, most of the time 2 to 3 months, or not, if not even longer. January trades, something where we're seeing a lot of money being committed to a particular trade. I'm also looking for repeat call activity. So you have to be, again, a member of Tribeca Trade Group to see these signals that happen real time. We go over these every day in the trading room, but I'm just going to share with you quickly. I'm not going to go into the exact contracts that were bought, but Deere. We saw this on Friday. Nice call buying post earnings. That's always that's usually a good sign for a name after it reports, when call buyers were present before they reported earnings, and then also are buying after they report, after they've seen the quarter. Marriott. This is a name that's come up a couple times now. A lot of call buying in this name on Friday. KMX, repeat call buying in this one, all the way up to Friday. Skyworks, a real aggressive call buyer as well on Friday in the morning, as well as in the afternoon in Skyworks. And it also, if you take a look at this chart in Skyworks, first of all, you notice that we're still way below the high price of Skyworks. You notice that we're above the 50, the 100, the 200-day moving average in SWKS. But I just wanted to zoom in here a little bit closer. After this earnings names, it's really been digesting this move for earnings, for about a couple weeks, and then finally decided to take this level out here. So I think this is a name you want to keep on your radar, considering that it's still way below the price of where it got back in June of, not last June, but the prior June. Unilever, we've talked about this one. Hey, this was a home run in the trading room. This was a name that we participated in, saw call buying several days last week, Wednesday and Thursday. I actually did not buy the the calls on Wednesday. Once we saw, it was kind of a twist of my arm. I don't normally like to take swing trades once the name is below the 200-day moving average, but once we saw that repeat call activity, I had to take a position in it, and this one ended up being a home run in terms of the price. You could see the candle all the way up to $48. So I had bought the March 40 strike. I think it was for about 250, and I was able to take that off for $7 just in the matter of one day. So that was the second rumor name to be taken out that we hit longs. We hit really nice profits, and the other one was Fortress FIG. So we were able to have positions in both of those positions that are being rumored to be taken out. Colgate, we've been seeing call buying in this name. This name also got a nice boost after that rumor was announced. ARNC, just nonstop call buying in this name several times last week, several times in the last couple weeks. It's almost every day where we see an aggressive call buyer in this one. I'm still long a small piece of ARNC. ABX, we talked about that one already. KKR, there was a really nice call buyer in the beginning of last week. Weyerhaeuser, this is one that we've seen repeat call activity in. We've seen call buying before they reported earnings, and then call buying after they reported earnings as well. I am long this name as it's now firmly above all the moving averages. Autodesk, this team reports in a couple weeks. There's been repeat call activity in this one. Oclaro, huge winner for us as well. There was one day last week that the name was up 10%. I think we saw call buying on this one in Tuesday, and then on Wednesday the name was up 10%. So huge winner in this one. So as you could tell, we're having a real nice February. We had a real nice January in Tribeca Trade Room. So go ahead and check us out, and you can be a member of Tribeca Trade Group. We still have a promotion right now. It's half off the first month, so you could put in coupon code TTG to get involved. You'll receive, you'll be a part of our all-day chat room, our live session trading room, as well as receive these newsletters on a weekly basis. So thank you for watching today's video, and have a great rest of your weekend. Thank you.